Good everyone. In this video we'll be talking about correlation in market. For those of you trading, you are trading different pairs. Maybe you focus on USD pairs, you focus on Euro pairs, you focus on GBP pairs, you focus on crypto pairs. Now you need this correlation for you to understand how the market functions. Before we start, let's look into the meaning of correlation. Now correlation is just in forex trading is the relationship between two currency pairs and how they move in relation to each other. You understand? Now correlation is just like a relationship between the two currency pairs. Like let's say relationship between let me use Euro USD to maybe USD chef. You understand? Or relationship between USD and Euro. You understand? So when you're talking of USD index and Euro index, now correlation can work there. Now if you want to check Euro index, now let me just give you an instance. Let's assume now that we want to check on USD index. Now checking on USD index. Now this is USD index. Then when you come to USD index, let me go to 2 hours so that we can see just the bigger picture. So if you go to 2 hours now, you now look at the market on USD index. You can now see that okay, USD index moved from resistance zone dumping, you understand, coming down, and it's approaching the support zone level, you understand. So and as it is approaching support zone level, it doesn't signify yet that the market is bullish. It means that the market is still bearish until it gets to that zone, you understand. So that means this means telling that there is a high possibility this market might break below to this zone and move before going higher. Now then let's look at Euro index. Let's look at Euro index. Now this is Euro index. On Euro index now we can now see that okay, let me go back to 2 hours using the same time frame. Now on Euro index, sorry, this chart is inverted. On Euro index you can now see that Euro on the index is moving from, it moves from a resistance zone, a support zone, to resistance level, and it's kind of showing a sign of a breakable, but this breakable might be a fake out for a clear of liquidity. Now how this correlation works is this: you want to trade Euro pairs, you want to trade something like Euro USD, you understand. You want to trade Euro index, maybe Euro USD. Now you want to check the index. Now when they talk of index, they are talking of the total strength of this currency, you understand. They are talking of the currency alone, indices, you understand. You are just talking of the currency alone. When you talk of USD index, you are talking of the USD pairs, like USD and in general, how strong it is, you understand. So when USD index is showing you a sign of a bullish market, and you come to Euro index and Euro index is showing you a sign of bearish market, that means you will now understand that okay, now watch. Remember when you are trading Euro USD, let's put it so that when we're analyzing it we can understand the analogy. Now remember that trading two pairs is just like trading a currency to another currency, the strength of one currency to another currency. So that means when USD is strong and Euro is strong, we have most of the time we have a ranging market, or the one that is stronger come trade above, even though the movement might not be so volatile. So now this is USD index, Euro USD. Now that you're trading Euro USD, see how it works. Before you analyze this chart, you're not going to USD index, that is checking the total movement of USD, US dollar, how strong it is. And US dollar is telling you, oh, I'm moving away from the resistance zone, moving close to support zone. So let's assume you came to this market when the market was here, respecting the resistance zone. Maybe it's a drop and come back for a retracement. You already know that this is a confirmation for a continuous movement. Then you come back and see it at this zone. Then you go forward to check Euro index. Then you came to Euro index, that as USD index was on the resistance zone, you now meet Euro index on the support zone. Now, what is the analogy is giving you? USD is getting weak, Euro is gaining momentum, gaining strength. You understand? That is the analogy there. Then you now go to your Euro USD. Now you're trading the two pairs. Now this is just like when you're trading Euro USD, just like checking the should I say the strength of these two pairs. So on Euro in general, their currency is gaining momentum, gaining strength, gaining inflow, but USD is gaining outflow or losing strength. You understand? Then if you come to Euro USD, what are you looking for? Now Euro USD is just a chart of two currencies. One will buy one, while the other one will sell the other one. That means if you say you are buying Euro USD, if this is Euro USD, if you are buying this currency now, what you are indirectly saying is that you are saying that Euro will be stronger than USD. You understand? That means you are buying USD. You are buying Euro against USD. What it literally means, like the analogy I will use for you to understand it clearly, is that it's just like saying that there will be capital inflow. People will be changing US to Euro more than the way they are changing Euro to US. You understand? I just use this analogy for you to just understand the picture of what we are talking about. That means the strength of Euro is gaining momentum, that is ready to, like, maybe investment is going on, business is going fine, everything, supplies, shipments and everything is going well. But USD is maybe having one, okay, it's not yet their time, is this or is that. You understand? That's how it functions. So when you now analyze the two index and the index are going in opposite direction, now the correlation there is that we have positive correlation and we have negative correlation. When it is a negative correlation, it means that the pairs are moving in opposite direction. That means Euro index is moving in opposite direction with US index. You have just seen US index is going for a sell, while Euro index was busy buying. You understand? So they were going in opposite direction. So you as an analyzer, what are you going to do? You are buying Euro against USD. Then you come back to your trade and come to your Euro. When you're not analyzing, you will be paying more attention to a support zone for your buy. You are not looking for a sell. So how did the correlation help you? It helps you to understand the movements, how the two of them are moving in accordance. Are they moving together? Are they gaining momentum equally? Are they losing momentum? Or they are moving in opposite way? You understand? So in that situation, maybe on Friday I took the buy. Those of you in the TikTok session, you saw it. All of us took the GBP USD, Euro USD, AUD USD. We took a buy from that pair. So now, those of you that is now seeing it now, you now understand that in that situation, maybe what you'll be looking at, where is a possible place for me to go in for a buy on this pair, instead of looking for yourself. Even if you now come to the Euro USD and you come to the chart and the chart is kind of being on a resistance level, there is a high possibility that resistance will be broken for more buys. You understand? So that is how correlation works. Just get it right. That is how correlation works. How the two pairs correlate together. Like I've said, we have types of correlation. We have positive correlation and we have negative correlation. When you're talking about positive correlation, that is when two pairs move in the same direction most of the time. Using the example like the one I've said, Euro USD and GBP USD. These two pairs often moves. These two pairs often move together because they both have USD at default. Now remember, in our previous video I taught you guys about base currencies and quote currencies. Now when you're having something like this, this is Euro USD. Now it is telling that this particular one here, anytime you come to currency pairs, the first one you are meeting is the base currency. That is the one going against the other one, while the other one is a quote currency, the second one. So if I'm to divide this into two, some charts, if you go to chart this thing, they will make it a way that will put a kind of a slash. You understand? This way. You understand? But no need. Just the euro is the base currency to this USD. So now that you have checked USD pair, USD index, and USD is not strong, and you have checked euro pairs and it's strong. Most of the time, even when USD is weak, if euro is buying, USD chair might be busy selling. That is if chair is strong also, but chair is a very crazy pair. You understand? It's a very crazy pair. So if euro is buying USD, then USD, the correlation there is that USD check. That means you see some people saying something like this, because they have checked the index, they will now say XXX USD buy. They will say buy. Then they will now come back and say USD XXX sell. Now why did they say so? You will be asking yourself, how did they know? What this XXX means is any base currency. If you have Euro USD, GBP USD, AUD USD, all these first, like USD is a quote, so any currency you ought to buy. Sometimes gold follow. Gold sometimes does not correlate to all these movements at times, but sometimes it moves together. You understand? So now that means all these pairs, that XXX represents any base currency before USD that is trading against USD should be buy, because you have already checked that USD index is very, very weak. That is why you'll be going for a buy. But you now come back and say all the USD XXS, something like USD card, USD chef, and co. You understand? All of them should sell. Why? Because USD is weak. Remember what I told you. Go and watch the previous video for you to understand what I mean by all these things. You understand? So now in this video, let's check USD. We'll check USD JPY now. We'll check USD JPY. USD JPY. This USD JPY. As you can see, it is on a sell. You see it's dropping. Remember that USD index was dropping. Now you see USD JPY dropping. Then let's check. Let me put it in a chart for those of you that is not used to trend lines. Let's check GBP USD. GBP USD. Now this is GBP USD. You see the massive pump. You see the buy. You understand? Break above and it's buying, going close to resistance level. When even with the view we have now, we still expect this market to break above it. So starting from Monday, we'll watch on how the breakouts, the retracements and pump. But even if this market retraces to this zone, we are looking for a buy around this zone. You understand? We'll be looking for a buy because USD have not actually regained any level. So there's a high possibility it will just come back for a retracement the way I said, then continue moving upward. Then let's check USD check. Now, if you check USD check, you can see massively. Now, with these little pairs I've shown you, you can see that anyone that USD is the first is selling, and anyone that USD is the last is buying. Anyone that USD is the base currency, it is selling. Anyone that USD is the quote currency, it is buying. That is how correlation works. So you, as a forex trader or a crypto trader, you look into index. It's just like coming to crypto now. For those of you in crypto, how index work most of the time is that you check. Sometimes you check crypto index. You understand? USDT. Yes. Check USDT. If USDT is these 2 hours, it is going upward. That means the US dollar, crypto dollar is gaining strength, and that's why you see BTC kind of having issue of going higher again. But now let me use the normal one that you need. You don't actually need the USD index. So let's look at BTC. Now, whenever you analyze the trade and you see BTC, okay, I think I have BTC here. Anytime you analyze the trade and you see BTC now we took a buy on BTC. I inverted the chart, and you see BTC on a buy. You see BTC on a buy, like you know that, oh, this market will bounce up. Most of the time, 99% of the time, most altcoins follow it. You understand? I mean, most stable coins. Let me not use stable coins, because stable coins are like USDT and USDC and co. You understand? But let's use like Ethereum, XRP, Solana. Now that BTC, you can see that BTC is going on a buy, just a retracement for a buy, then continuation for yourself. You understand? So you're going for your retracement, then continue selling. Maybe selling to this zone. You can see like set an alert at this zone. So because of this, let's check ETH. You can see that ETH made the same movement with the BTC movement. You understand? See, now you can now see that ETH was also making the same retracement. Now the momentum might not be the same. That is the case. It can happen anywhere. The momentum might not be the case depending on the capital inflow. You understand? But what matters is that when BTC is going on an uptrend, you don't expect to be selling your coins. You understand? Because when BTC is going on an uptrend, it kind of correlates with every other pair. Every other pair follows the movement, apart from some shit coins and co. You understand? So that is how correlation works. So you as a trader, when you want to analyze a trade, it is always advisable, especially Forex traders. It is always advisable, look deep into the currency pairs. There is a currency that is hard for you to see the index. I think GBP. Yes, wait. GBP does not have just one index. Yes, GBP does not have one index. Like now, if you tap euro now, you can have euro index. See, euro currency index. If I type USD now, let's say USDX. Now you can see dollar index now. But if you type GBP now, it doesn't actually have one currency index. So that is why sometimes it's very hard to predict GBP movement. But whenever you see USD very weak, most of the time GBP does not waste time in going high. In fact, in terms of the pump that the market had, if you check GBP pump, if you check GBP, watch, let's check the movements of GBP USD. Check the movement on GBP USD, we discovered that the pump was so massive. Yeah, we took this buy. You understand? So in this video now, I believe, you see, as I'm coming down to explain it, I believe that all of us now watching this video will understand how index work and how we can go about it. You understand? So when you analyze a trade and maybe the index is going for a buy, and you look at the trade and the trade is going for a sell, there will be a manipulation. You understand? You might see a kind of volatile movement in the market for a correction to bounce up, go back again. And sometimes when this one happens mostly in crypto, when BTC is on a buy, maybe going to replace a sell. For those of you that do not know, it is not all buy that is buy, and it is not all sell that is sell. When the market is going for a retracement, that part we call it a retracement, a bounce back. You understand? It is not actually a selling market. So when BTC is going for a retracement, maybe there's an imbalance in it to complete, and Ethereum is not moving the same way. Sometimes Ethereum will not sell immediately. What Ethereum will do is, we see Ethereum ranging, waiting for BTC to complete the movement. Then immediately BTC complete the movement, dump, Ethereum will follow immediately. And then you will see BTC dumping faster than Ethereum. If you doubt it, let's check this chart. This BTC USDT. So if you check this BTC USDT now, I took a sell on a buy on BTC, and currently it's kind of rejecting this level. So this BTC now, you understand? So see the sell-off on BTC. Let me use 4 hours time frame so that it can be easier for us. So now see the movement on BTC. A downtrend, a break above. We expected BTC to break above this high so that we can now know that we are going on a reversal. But what's happened? It's failing. It's finding it difficult to break. So there's a high possibility that is what is making us to now believe on more for that one, because it's not yet ready. We are not seeing the strength for it to go higher. So if you check this BTC on 4 hours time frame, then you come to Ethereum and also check Ethereum on 4 hours time frame. You can see that Ethereum is having slow movement. You understand? It is not dumping like BTC. You understand? So you can see that it is not dumping the way BTC is dumping. It is just ranging outward, waiting for BTC to make a decision. You understand? So Ethereum is making everything possible to retain this level. It's making everything possible to retain that level. When we look at BTC now, let me put it on the trend so that I can see it clearly. You see that BTC has more volatility in the market in terms of since the movement started. So it has moved, pump, do everything you want to do, and it's still yet to move. So one thing that is holding this market from breaking above and continue moving is because BTC have failed to make an impulsive movement. Yes, it's that impulsive movement that Ethereum is now waiting for. If BTC can just make a push, boom, you will see Ethereum bouncing off. You understand? So that is one of the ways on how to use correlation to understand the flow of the market, the decision of the market. Sometimes Ethereum speak first before BTC speaks. Sometimes you see Ethereum going on a support zone, holding that support, showing you a reversal pattern for your buy, then BTC is still going down for yourself. Most of the time, how I trade that situation is this: when BTC is still going down for yourself, and I spot an order block beneath, and Ethereum is holding its position, showing everything, every confirmation for a buy, then BTC might have a volatile movement, spiking down, picking the zone, and bouncing off so that Ethereum will move together with it. It happens. Sometimes you see Ethereum being on the resistance zone, showing a sell, just ranging there, while BTC is going up. Then just look around. You will see a supply zone. Check that supply zone. There is a high possibility that supply zone will hold. And if the reverse is the case, if BTC is the one giving the information ahead the time, just flow with the way the market is moving. Now let me give you an instance. There's a trade. The trade we took yesterday. Let me use another pair. Let me use BTC Binance. BTC USDT. So I'll use BTC Binance. Now use BTC Binance. Now BTC Binance. Then see Ethereum. Now let me go to 15 minutes time frame. This is it. TH. This is ETH. Now this movement, what is this? 6th of September. It happened yesterday. I was watching it. Now watch what happened. There's something we saw in the market that led us to take this zone. Okay, now see this movement now. If you check previously, you can see that this market has been Ethereum first bounced down, clearing the liquidity at this zone, and it came down more, and we showed reversal before BTC. Then we now came to BTC. When Ethereum was bouncing back, we came to BTC. BTC was forming a reversion pattern. See the pattern here. Those of you that doesn't know much about patterns, BTC was forming a reversion pattern. Not only it was forming a reversion pattern, I wanted to see something. On that reversion pattern, we are now seeing it having a reaction on a demand zone, showing a sign for a buy. Yes, see it here, showing a bullish momentum, like BTC holding this zone. You can see how BTC bounced on it multiple times. Immediately we saw it, and Ethereum already bounced back, like the momentum to close above this zone, we traced for a movement. Immediately we saw it, we took the buy. Like what I just did was tell my students, take buy on BTC, calculate your risk, make sure that your stop loss is to be below 109,950. That was what I told them, 109,950. So that time this market was around this zone. So we placed, me personally, I took say interest. So this before doing this video, this market was here, and I closed one of it, holding this one. So why am I holding this one? I'm expecting this market to at least give me to this zone. I'm taking partial profit, that is closing one of the trade. This one should move me to this zone before it retraces me, or clear this liquidity and come higher to this my entry. This was where I took a sell. For those of you, about 2 days ago, they said I would took. This was our entry. Our entry was around 11128 something or 26 something. Yes, so it was around this zone. Yeah, around this zone. So now some of you will ask, how did I get the entry? You know, one thing here is that as we are teaching you, we also practicalize everything we are teaching. This is our strategy we teach. So the first thing I did was I marked out this order. This is a precious candle in market here. I went to 2 hours time frame. On 2 hours time frame, you can see this precious candle. Very precious, you can understand. Acting in between 2 green candles. So I marked it out. Then I went to 45 minutes time frame. Let me close this so that you will not be confused. I went to 45 minutes time frame. On 45 minutes time frame, we can now see. Now let me put it on a trend. We can see that it is clear. This market, let me explain it this way. This market made a range. This market bounced off from here. Came up. What is this? Bounced off from here, came up, showing you, oh, there is a lot of force on this zone. You understand? So after it came up, it bounced above, came back again, retraced to that zone, dump. Came back again, retraced to the same zones and pump. Then came back again to that zone and had a range, and that range is liquidity. So after having the range, it's dumped. You understand? So we saw this market before here. So how did we now sell it? What made us to sell it was when this market was ranging on this zone. When it was ranging on this zone, we drew out a pattern. This market, after dumping, what did we expect? We expected a massive retracement to go higher. But what happened? It started losing momentum, ranging. So immediately I saw this move, 1, 2. This market was here as of that time. I just told them take enter here, and we sold. Because I knew it would sell. My take profit actually, to be sincere, where I gave them as take profit was this low. I was expecting this market to dump immediately to this zone. But yesterday when we saw this reversion pattern, we have to take profit and close and take the buy. So as we are taking the buy, we are not yet setting for a buy. Why? We are still waiting for the sell. Because this market is yet to break above any of these zones. So what I'm doing now is that when I will look at the market, I will just do my analysis, check the market movement, the momentum in the market, check it clearly, and I'll look for the sell. So the only thing that will make me buy this market now, this BTCs, if this market can range from here going above, retracing, then I'll go higher. But provided this market is still underneath this zone, then this place is a high possibility for market to come to. It's a high possibility. Then when the market gets to this zone, when you get to this zone, which is 109,408, then is now the movement that will determine if we jump in from here or we take this zone as our entry. So that is what we are waiting for on BTC. So thank you guys. I didn't mean to explain all these things in many of my videos. I always calm down for you people to see how it works in the market. So I didn't mean to explain all these things, but I just want you to understand how correlation works. It's actually a very important thing. It helps me a lot. I check the market, check the correlation between the market, the pairs, then I'll take a trade. But don't try this shit with gold. Don't try it. Don't try it. If you know you love yourself, don't just bring it up, because gold can move on its own. You understand? So, like I've said, we have positive correlation, we have negative correlation. Positive correlation is when the charts are moving exactly the same way, but negative correlation is when the charts are moving in opposite way. So, when USD index is moving in accordance, when USD index is selling, you understand, and Euro is buying, Euro index is buying, that is the negative correlation. Two of them, you understand, two of them are moving in the opposite direction. But when USD index is selling, Euro is also selling, that is a positive correlation, and there is a way to trade that one, you understand. So thank you guys. Subscribe, share our live, always watch our videos. At least if you don't understand this time around that we explain this, rewatch and rewatch and rewatch, you definitely understand it. And if you have a question, do us well by asking. There's nothing bad if you ask us if there's anything confusing you, and if there's something you have heard that is maybe in opposite of what we are saying here, you can ask a question, then we explain it in details. Whatever we say, we have a proof for it, and we have a chat movement that respects it. Thank you so much. Always CAPITALFX.